searching for an issue where we see none. We as traders tend to allow the markets to control us even when we don't want it to. We allow trades to fail setups and formations by bending rules and guidelines. Why we allow trades to go against us has to do with the natural instincts and emotions that resides within us. In order to deplete the supply of emotional control on our trades, we need to replace it with robotic trading. You you need to define if you have a growth mindset or a fixed mindset. Being open to change leaves you less susceptible to downward spirals. If you find yourself not being in control of your emotions and allowing your convictions to become overconfidence, then let's try to simplify the matter. So that was me briefing. Okay, let's get into the first slide. Okay, so these are some aspects of a conviction trade. A confident trader, a trader that knows exactly what he or she wants to accomplish during the trade. So just some pinpoints um, on a conviction trade or a conviction trader and their mentality, their aspect of how they perceive things. Some of the stuff that are highlighted in red are just for us to kind of pinpoint the key thoughts and ideas that I'm trying to get out there. Okay, got a little pen thing. No. Generating a trade idea based on technical or fundamental reasoning. Exhibiting control with trade plans. Remaining open-minded yet reassured by methodology. Patience when initiating the position. Understanding the risk associated with the position. Limiting all exposure to outside deterrents. Coordinating exit strategies with entry strategies. Adding into a position when it's justified. Non-impulsive buying or selling of position. Using stops to safeguard capital. Allowing yourself and your trade to be wrong. Accepting that failure is an option that you have to submit yourself to. Being able to take another trade setup with the same ambition. And lastly, tunnel vision. So I'm just gonna run over some of what I think are behind what I wrote as for a general statement based on some of these aspects. Generating a trade idea based on technical or fundamental reasoning. So your conviction can be based obviously on the fact that you're using moving averages, you're using trend lines, flags, breakouts, whatever your conviction is for taking the trade, or a fundamental reason, being it earnings report or it could just be a PR, it could be a good news, it could be an FDA, whatever your conviction is for actually getting into that trade. That's the generation part of the trade. Exhibiting control with the trade plans, meaning that I'm taking this trade because of. I need to be in this trade because of this reason. So you need to have a trade plan that that obviously coordinates and helps expound the conviction part of your trade. Okay, remaining open-minded yet reassured by methodology, meaning that are you allowed to keep the trade live still? Are you allowed to keep the trade live still, even if your trade actually goes slightly red on you? Are you allowed to to be into the trade if it's not instantly working for you? Obviously, if you're short or long, it could be working up or down, right? Patience when initiating the position. A lot of traders get very excited. If there's a PR out on something and the chart's up already, they're very sure about the trade, right? They have the conviction, but they don't have the patience. And so lacking the patience to wait for that entry really can mess you up in a position. It can just put you into a spot where you're not allowing the trade itself to pull back, or to breathe for a little bit before you initiate that position, causing yourself to be in a higher risk situation. Maybe even in a situation where that trade itself stops you out, you only to see it go further on. So you had the conviction, but you ended up chasing a trade. So make sure that even with conviction, you have to have patience. You still have to wait for those charts to come back to the area that you want to take it at, so that way you can minimize all the risk at every cost. Because not because something is going to go to $100 means that you want to pay $75 when you could pay $70, right? And so it's all about minimizing the initial risk, and in order to do that, you have to be patient a little bit to get that entry that you feel more comfortable with. So that's the patient when initiating the position. Understanding the risk associated with the position obviously ties into the patience factor. If you can't be patient, you can jump into a position too early, overshooting where your risk tolerance is at. If you only want to risk $1 on a trade, and you shoot into a trade that's maybe exploding a little bit, and you feel like, okay, well, it's gonna go higher anyway, so I'm gonna trade, I'm gonna trade up for it, and then the trade decides to pull back. But before you can capitalize on 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 being, safe in the trade, meaning that if you bought it a point and a half up and your risk is only a point, but it pulls back that point and a half to reset before it works, then you're already lost. Your trade's already stopped out before you even got started, even if it goes 10 points after that. So if you can understand each risk with the situation, say like if you are so convinced about a trade, you have a strong conviction about a trade, you want to get into the trade, but you know you're paying up for it, then take a smaller position, allow yourself to get that pullback if you have to. So you take the position saying that, okay, well, in case it goes, I'm already in at least. But in case it pulls back to where I think it should have pulled back in the first place, then at least I can still be in the trade long enough to be right. Because if you cannot associate that risk properly, if you cannot assess that risk properly, you're gonna have yourself into a strong conviction trade and still end up losing, which is where you don't want to be at all. Because then you end up messing up your entire mentality. You end up messing yourself up. You end up having self doubt, and you put a lot of emotional bondages on yourself, and so you don't want that. So at the case of where you feel like you're chasing a trade, you have the strong conviction, take a smaller position if you feel like you're chasing, and that way you can eliminate that initial risk on the position and keep yourself still in it, and also most importantly, keep your mind frame still intact, because the last thing you want to do is obviously mess with your mindset, okay? Because that's definitely not something you want to do. Limiting all exposure to outside deterrents. Outside deterrents, Twitter, friends, family. I know better than you know people. You know those people. You want to take a long position on something? Well, I hate it, so I'm never going to take a long position. You're wasting your money. Those type of people. You want to stay away from that. If you have a conviction for a reason on a trade, you want to not, you don't even want to be around people that supports you, because why would you even care if somebody supports you if you're going to be wrong eventually? Just say if your trade doesn't work, why would you care that somebody's going to support you? I mean, it's great that they would have support for you, but it's not great that they would go down the drain with you, right? Because that doesn't make sense. But keeping limited exposure to outside deterrents. You don't jump on stock twits, and don't search all weekend on Twitter for the ticker that you're in, to hear other people bashing it, or to hear other people saying, derogatory stuff about it. When you have a conviction, you got in here for a reason. You don't need to be exposing yourself to other people's mentality, especially if it's a smaller frame mentality. If you're looking at a bigger picture, if you're taking a trade in a daily time frame, and then you're looking at somebody else and they're talking about, oh well, the trade's not working, and then you look at the chart in a bigger perspective, obviously, and it's just merely down a little bit or whatever, and you're looking at it a bigger time frame, and then you hear all these people talking about the same thing, like, oh, it's not working, it's not a good trade, it closed red on the day. But if you're looking at it from a bigger perspective, for whatever reason you're in, if you have that conviction on the trade, then having other people um, having other people's opinions can really mess you up, especially if they're not really worthwhile opinions. Half of the 90% of the stuff that you read on Twitter or StockTwits are not really any kind of functional, tradable, actionable type of things, unless obviously you just follow people that shoot out, like, interesting things during the day. Most of the stuff that you do read is just a bunch of garbage. Coordinating exit strategies with entry strategies. So if you get into a trade based on a Fibonacci retracement, use that Fibonacci as your reason for ads, profits, price targets, whatever reason you got in for. At least give that strategy the respect that it deserves. If you got in, coordinate exit strategies with entry strategies. If you got in using an 813 crossover, which is my strategy that I use, if I got in using an 813 crossover, at least I want to give the trade enough time to work where, until there's an 813 cross down, or until there's something that really affects the chart, that's going to be my reason for exiting the chart. So if there's a certain reason that I got into the trade for, I'm going to stick with it till it shows me otherwise. So coordinating your exit strategies with your entry strategies also helps with your conviction, because I am convinced that the trade is still intact as long as my strategy still holds true. Adding into position when it's justified. Only when it's justified, meaning that if I'm convinced that the trade's going from A to B, but between there's going to be some little hiccups in between, right? There has to be points in between A and B where it's a justifiable add. You just can't add into a trade because it's going up. Okay, so say you took a trade at 10 and you have a price target of 12. So you take it at 10, and then you add at 1020 and 1035 and 1042. So that it obviously may still be going up, but was it a justifiable add? Now, sometimes, say for example, I took a trade at 10, and if I even have a price target at 12, even though I have a price target at a very high area, sometimes I don't have a justifiable add until maybe 1110, or 1090, or even, like, 1140, until I have a justifiable add point where I'm saying, well, if I add into this position, then I have to make sure a couple things. If I'm adding, I'm basically saying that I'm willing to bring my average up, meaning that my stops got to be higher. I'm also willing to say that, at this point, I'm so much more committed now to the trade, being that I'm putting more effort, more money, more capital into it. Um, there has to be a reason, a justifiable reason for adding to position. Sometimes I would take a trade and I won't add in it for the entire day, and I'll go through the entire day with a really nice, clean chart, and obviously I could have made a lot more on it, and I won't add. And then I've even talked to the room about this. Like, there are points on the chart where I just cannot add. It didn't break an area strong enough. It did, even though the chart continues to go, say, you're playing a chart to the upside. Even though the chart continues to go up, sometimes there just isn't a point, or you miss that little breakout area there, and you just never get a safe area to add into it. But sometimes I just don't add into it if I don't find a justifiable area, and I'll ride that entire position with the smaller position that I have. and I'll be comfortable with it, and I'll still consider it a great trade, and I'll be secure enough to say, well, I didn't add because there was no justifiable area to add. And for me, I feel like I'm comfortable with doing that. I'm comfortable with saying no, I didn't add. Why? Because it was I just couldn't justify it. I couldn't tell you where I would add. And if you look at a chart hindsight, you would say, "Oh, well, there's obviously that's the pullback, or there's obviously that's the formation triangle, ascending wedge, descending wedge, whatever." There would be obvious breakouts or obvious areas to add into it. Hindsight. When you look at a full chart, it's a whole different picture. I can tell you an entire storybook about a full chart the day after it's done. I can give you every single thing you want to know about that chart. The candlesticks, the highs, the lows, the breakouts, the formations, each flag, each wedge. I can show you every single thing that you know, that you want to know, or that you think would be a teachable experience. But when you're day trading live, candles are not printed in front of you. They're made, while you're trading. It's not as easy sometimes to find those things or pick those things that would obviously give you a full, a full end of day view. So during the day when you're trading, sometimes you don't find a justifiable spot to add and you just don't. But I think that's okay, honestly. I think if you're trading all day long and you have a great chart on, and you've never added, and I say, hey, why didn't you add to the trade? And you say, I didn't find a justifiable reason to add into the trade. I said, well, that's okay. I said that's still a great mentality, because it's not always about how much you make. It's about how well you're trading, and that's just more important. Non-impulsive buying or selling of position. Obviously, I think I covered a little bit of that with the add-in position on the justified section, but non-impulsive buying or selling off position. So non-impulsive selling being that if my strategy is still intact, if the chart still has room to go, if it doesn't show any weakness, if my moving averages are still intact, if the buying pressure is still there, there's no reason for me to exit the strategy. Maybe you wanna exit because you can't hold it past 4 o'clock. That's obviously your reason for exiting. Maybe you wanna exit because you're just excited, but you can be excited without having a reason to sell the position still. So a lot of people, they end up selling a great position. A chart moves up. Um, they see a decent amount of gains, and they sell. So they sell from anxiety, but they don't sell because they had to. They sell from anxiety. So is that a problem? No. Is it? Could it be a problem in the future? Yeah, because you're training your mind to take quick profits, and you're not allowing yourself to grow. You're not allowing yourself to be different from, if I keep doing it today and I do tomorrow and I do tomorrow, every day maybe I'll have gains, right? But let's just take it into dollar amounts. If every day I can take that $100 off that trade, but every single day those same trades go to $200 and $300, one day it's gonna go to $1,000, and you're still gonna be taking $100 because you've trained your mind to do it. So you've trained your mind to almost scalp trade without doing it intentionally. You quick triggering your mind to take profits, take profits, take profits, and you're never exposing yourself to sit back and take a calm trade. And I don't know how many times now I've shown in my chat um how much sometimes I would take a trade at 9:45 in the morning, and I'm closing it out at 3:45 in the afternoon, because either was so good that it worked all day long and gave me no reason. Like that CSX, I mean, the only part in that trade, it stopped me out because it pulled through a little pivot area, but it was basically an all day trade on that thing. Um, it's just a matter of, if the chart doesn't tell you to sell it, don't sell it. And if you have to sell it, then sell it for a reason. But don't sell it just because you feel like doing it, right? So Non-impulsive buying or selling of the position. So buying or selling means longing or shorting, okay? I have another slide. Yep. Okay. Using stops to safeguard capital. So keyword safeguard capital. Keyword safeguard capital. Everybody say that. Keyword safeguard capital. Because that's what it's all about. Safeguarding your capital. Keeping your money safe. Locking it up in a vault. Using it when you need to and put it back in there. So hopefully with some extra friends to go along with it. Safeguarding your capital is most important. Stops will help you to do that. Stops will do things that you can't do. Stops will protect you from going into trades that, or exiting trades that you won't want to exit because maybe you have too much conviction. So stops will protect you. And a trader that has conviction that got into the trade, if you had enough conviction to get into the trade, you also should have enough conviction to get out of the trade if it doesn't work for you. Allowing yourself and your trade to be wrong. You're allowed to be wrong. You're allowed to be wrong. Every day you say that to yourself because that'll make you feel better. Not because you're losing money, but because you can allow yourself to be wrong. It's okay to be wrong. You don't need to be right 100% to be a winning trader. You just need to be consistent. Be consistent in using that one at the top. Safeguard your capital first. That's where your stops are going to be. Allowing yourself to be wrong is okay, as long as you don't allow yourself to be so wrong that you can never get back right. And even when you could be right, you can't be right because you've been wrong so much. So make sure you safeguard your capital. Allow yourself to be wrong. That's okay. You can be wrong. You don't have to always be right. Trades will not always work the way you want it to work. Formations will not always hold up the way you want it to hold up. Moving average won't always keep you on a trade. A strong moving average like a 200 SMA is not going to be your holy grail. It will go through up or down eventually. That's how charts work. They're not going to be a holy grail. You can't just say, okay, well, something's at a 200. I'm just going to put my entire capital into it because it's at the 200 SMA. It's the holy grail of moving averages. It's not going to work that way. I have the best strategy in the world, so I'll throw all my money into that trade. No, it's just not going to work that way because they will fail, and they do fail, and they almost always will fail eventually. So make sure that you allow yourself and your trade to be wrong. But a trader that has conviction into that same trade can also have the same conviction to get out of the trade if it doesn't work for you. So this is kind of like the back end of conviction, where you have conviction to get into the trade, but you're also having conviction to get out of the trade if it doesn't work for you. Accepting that failure is an option that you have to submit yourself to. A trader that's convicted enough to get into a trade should also understand that you can admit to yourself that failure is an option. It's not the option that you want to take. I'm not talking about failure as a trader, just failure as that trade individually. You have to accept it to yourself. You have to admit it to yourself that yes, my trades always won't work. And when they fail, what do I do? How do I react? How does that offset me? How does that make me better or worse? How does that turn my day? How does that turn that event? It obviously it has to be a really robotic thing. And so if you're convicted enough to get into a trade, if you have strong enough conviction to get into that trade, have strong enough conviction to safeguard that capital, use your stops, and if and when you do fail, or when some of those trades do fail, because they will fail, I can guarantee you that one, they will fail sometimes. Be strong enough to say that I'm okay with that. I'm ready to, take another setup when they happen, the next line, with the same ambition. Meaning that this first page ties back into the second page ties back into this first page. All this exciting stuff that got you into the trade in the first time, after you're stopped out and after it fails and after you lose money, you still have to have that same ambition to get back into the trade the second time. So make sure that you can allow yourself to be wrong but still have the strength to come back in. Because if you can't find that strength to come back in, if you've been broken mentally, it's no, you have to stop, and you have to stop, reevaluate before you jump back in, because then you just kind of gonna be, you're gonna be in quicksand for a little while, and it's just not gonna be very successful. Make sure that you have tunnel vision. I think the lack of focus really does not help anybody. Your focus on your, you don't have to, when I say focus, I'm not saying stare at your screen till your eyes burn. I'm not talking about that kind of focus. I'm talking about, if you're in a trade, stay in the trade. If you're in a trade, stop looking at other stuff. If you're in the trade, utilize that trade for what it is. You only need one good trade for the day to make all your money. Find one good trade. Sure, tell me which one's the good one so I can get in there, right? That's what you're asking. And that would be the viable question to ask, because I wish I knew. But all you need is one good trade. So if you took, for example, 5 trades, and even if those 5 trades, only 2 of them worked, then you would only, you would lose on the 3, but you would be able to safeguard your capital. You add in the justifiable area for the 2 that works, and you'll end up having a profitable day eventually. So it will eventually pay off. Overconfidence. So this is the part of stuff that gets you in trouble. Now the thing is that a lot of these initial areas for entries with an overconfident trader and with a trader that just has conviction are actually the same. It's the end results that differ. So generating a trade plan based on technical or fundamental reasoning is the exact same thing that got you into a conviction trade. Patience when entering the position, same thing that got you into a conviction trade. Understanding the risk associated with the position, same thing that got you into a conviction trade. Not responsibly managing the position. Difference. Failing to respect the strategy. Difference. Adding into a trade after it has broke ideal formation. Not using stops to protect your capital. Failing to admit failure. Being right even when you're wrong. Susceptible to others' opinions. Feeds into opinions of others. Angered by opinions of others. Still have tunnel vision. It's self-praise in small wins. Holding on to big losses. Okay, so let's work our way backward. No, let's go back from the front. Couple of these things are the exact same reasons that you got into the trade, even in a conviction trade. Couple of these things are the exact same. Nothing have changed for when you got into the trade. Your confidence level, nothing has changed. Your confidence, your conviction, they're very similar words, but they do have obviously, small little detailed differences. Um, it's great to have confidence. It's great to have conviction. Those are 2 characteristics that you want to have. You walk into a room, you want to have confidence, right? You walk into a room and you want everybody to be staring at you, and you want to have, I don't know, a big thing on your head, and everybody notices when you walk in, like a neon light or something. That's overconfidence. So there's a difference. There's a difference to be, a person that demands respect, or a person that forces others to respect them. So there's a big difference with just being confident, which you should be, or being overconfident and just being a jerk. So when you're overconfident as a trader, um, you fail to see future things. You fail to actually have control of your trades. There's an illusion of control that you can portray. There's that hey, I told you so. There's the I knew it before it happened. There's all of that sort of stuff, that overconfidence. That's the mentality that really you don't want to be into. You want to be humble. And if you're not, eventually the market will humble you. If you've ever gotten to a case where, hey, you've taken 1, 2, 3, 4, 5 trades, they're all green, they're all working, suddenly become the cockiest person out there, the market itself will humble you eventually, because that's just not the way to do it. I mean, can you continue being like that? I guess you could. Can you be like that forever? I guess you could also, but eventually it'll catch up to you, and it's not really, it's not really like Why would it catch up to you? Well, it'll catch up to you because you'll get so overconfident in a trade that you'll end up taking a big loss. Right? You're so confident that this trade's gonna work, I'm not gonna put a stop. I'm so confident this trade's gonna work, I'm not gonna care if it pulls through an area where I should have stopped out. I'm so confident that this trade's gonna work that I'm just gonna add into the trade even if it dips on me because I'm so confident it's gonna go up. I'm so confident in a trade that it can never go wrong, so I'll never say that I was wrong. I'll always end up being right. And so that's part of your overconfidence, and that's what's gonna get you into trouble eventually. Not saying that any of us here act like that, but you know, you could get like that. You don't have to physically walk around, you know, with your pounding your chest that, you know, to be an overconfident trader. You don't have to do that. You can see it from a person. And the worst thing is, I mean, you're not here to try to judge anybody else as far as where their confidence level is at. You're trying to judge yourself. Do I get to a point where I'm too big? Do I get to a point where I am overpraising my own wins? Do I get to a point where I feel like I'm above, you know, every other aspect? And it's not about a personal thing. See, that's the thing that I'm trying to get to you. It is not about a personal competition. It's not about you fighting somebody else for a better trade, better entry, better gains. It's not about that. It's about you fighting your mind to not allow yourself to get overconfident. The fight isn't amongst other people. The fight isn't amongst Twitter folks or other chats or anything else. It's not about that. The fight is within you. So it's about you trying to better yourself, and by you bettering yourself, you're not trying to develop a mentality where you can sit back here and just feel like you're on top of the world. Because the day when you feel like that is when you start getting yourself into mental trouble. Because eventually you'll do something that'll be ridiculous. The higher your confidence level, you know, ends up going up, the more likelihood that there's going to be a mistake. And so you don't want to get yourself into a situation like that. So remember, the fight isn't about or has anything to do with anybody else. It's not a personal fight about a, you know, with another physical personal person. It's the fight that I'm talking about, overcoming the overconfidence part inside of you. And that's it. It's inside of you. That's the fight, okay? So never think that it's about it. This whole thing isn't about fighting overconfidence and looking at other people saying, "Oh, well, that's the person he was talking about." No, it's not about that. It's not about that. It's not about a physical person. It's about doing it for yourself because you want to be confident. You want to have conviction, but you don't want to be overconfident because that's going to start messing up your mind. Remember, for me and for you guys, it's always going to be a mental aspect first. Mental aspect first. For me, it's training the mind more every day than it is about trading at this point, because the trades, the setups, that sort of stuff is almost robotic to me now. It's the mind training that I'm working on, and that's what I'm going to continue working on. And so when I do the webinars, I think I really try to focus more on your mindset itself, because it's so much more valuable than anything else that you can do. You can have a strategy. You can have a robot to do what we do. Okay, it's not about that. In order to be that robot, you have to not think like a human anymore. And so the natural instincts that gets you into trouble is where you have to drop off, right? So you can have your conviction, you can have your confidence. When it gets to being an overconfident state, step back for a little bit, because you can get yourself in trouble. And it could be an overconfident state for anything. Okay, you can get yourself into a state where you're overconfident, because you've had 5 winning days. You can get yourself into an overconfident state where you have big profit days. You could get yourself into an overconfident state where you I don't know, where you feel like what you do is better than what everybody else does. So there are a lot of ways that you can get yourself into an overconfident state. And so what you want to do is eliminate yourself from getting into that sort of a mindset, because that will mess you up. That will really, you will find yourself maybe going up in sort of a bubble, where eventually it will pop, and that's not where you want to end up going. Okay, so mindset is going to be a foundation of what you're going to do. The conviction is going to be the reason and why you want to take the trades, the setups, the the news, the your strategy, your whatever, the reasoning that you wanted to take that trade. And everything else for me, the little pyramid thing there is just a little graphic display, but for me there's so much more in detail that I wanted to put. There just wasn't enough little triangles there to put it on. But for me, my underlying thing, my foundation, the basis, the stronghold, it's the mindset. And that'll always be the base. Because if you do not, and if you cannot figure that out, the mindset part of it, I think everything else just goes up in smoke. You can have as much money as you want, you'll end up losing it eventually. You can have a $1,000 account or $1,000,000 account. Eventually, you'll end up losing all of it either way. Um, because the market's hungry and she'll take your money. So the mindset is where you want to be. It's the only thing that'll keep you focused enough to achieve everything else. And then finally, eventually, right at the top of that pinnacle, you'll find success eventually, but at to what cost? So make sure that your mindset's the foundation of your pyramid. Okay, so that's pretty much what I have for these slides, and I do hope that some of this stuff could help you. So we'll run into some other sides charts, and we'll get into some of that stuff. Thank you.